Hi guys, I'm here with a new video and we'll try to learn how to technically analyze the market. A complete lecture I will try to deliver tonight, and we'll discuss few elements which we need to take a good trade and to make a profitable trade. Alright, Forex is just like a chicken curry. Let me make it more easy. Forex is just like a chicken curry. We need some spices, elements we need together on a flame. We need some tools. We gather everything. We make nice food. For example, we need paprika, chili powder, salt, some lemon, chicken, pasta, whatever we are cooking. Some water, some oil, garlic sauce maybe, ginger garlic paste. We gather all these elements together and we create a chicken curry. To create a chicken curry, probably we need knife to cut tomatoes maybe. We need exact flame which is okay to cook the curry. We need pots, right? Pot, fork, knife are the tools. Spices, chicken. We need everything in a right manner. We have to arrange everything in a right manner to make nice food, to make a nice dinner. Forex is just like a chicken curry, guys. I give always this example. Our all elements we need, our elements are fine, we are good to go. So let's find out how we take a trade, how we gather our spices together to create a nice, profitable and successful trade. Before I proceed, let me tell you that if you're watching this video first time, subscribe to my channel. Click the bell icon so you can have future updates. This is an educational channel, free of cost. I've updated this channel. It was in Urdu and Hindi before. Now I've started English lectures as well. So I'm gonna try to go towards more advanced levels. But this is gonna be a very important video if you want to learn, if you want to take forex as a future, forex or stock market as a future business. Okay, and I've got a Telegram group. I'm gonna drop the link in the description. Okay, you may join the group. Why is that? There are two groups I have. One is for Urdu and Hindi users, and one is for English users. And apart from this, I have a channel in which I explain what do you call it, exit and entry points. I will explain how my exit and entry points work. So you have to join that as channel as well. In that channel, no one is allowed to text, but in the discussion group of Hindi and Urdu and in English separate groups, you can share charts, you can ask about the charts, you can ask questions. It'll be answered by my admins and myself. I've got about 18 to 20 admins in that group in Urdu and Hindi, and English group just started now. We've just got 37 members at the moment, but soon you'll see loads of people coming in because English lectures are properly. I'm start creating English lectures. I'm gonna concentrate on that as well. All right, let's start. Elements required to take a successful trades. Trend. What trend it is. Where is the support and resistance? Finding the wave, impulse and correction. This is something new. Those of like members who know a little bit of elite wave, they know what is an impulse and correction. Patterns, price action pattern. I've already explained that in my previous videos. So you go breakout strategy. How we take a trade on the breakouts. The most successful strategy of the world. It is the most difficult and most successful and most profitable strategy. You'll be millionaire very fast if you caught the patterns right. If you caught and if you have a command on the breakouts, you are the most successful. You can be a very fast millionaire, very fast. Multi confirmation with exponential moving average 50. what is multi-confirmation? When we try to execute our trade, we multi-confirm the price to make sure that we do not make any mistake and we are just executing our trade on the right time. Okay. Every one of you probably know that market has three trends: bullish, bearish, and the ranging market. Everyone knows that, I think. I've already explained as well. But people will start doing forex and they just start watching on YouTube for a couple of days. They know there are three kind of trends in the market: bullish and bearish. Alright, everyone knows that. But how many ways a market moves? No one knows. Very, very less people know. Probably my students, probably some international guys, students who are very experienced. Market moves in two ways. There are two ways market moves. Yes, market creates a bullish trend and a bearish trend and a ranging market. But market moves in two ways. Always. There's no third way market moves. Either market is in a impulse wave state, it moves impulse, and then it can be in correction. There are two ways only. Number one, impulse. Number two, correction. Right. It moves in two ways, but it doesn't mean that it's going to move first of all impulse and correction, or correction first or impulse afterwards. No. There are three kind of patterns market will create. Either it will move impulse, then correction. Number one. Number two, either is going to move impulse and back again as an impulse wave. Number three, either is going to move in correction upwards and coming back in correction. Right. So there are three scenarios market can move: impulse and correction, impulse and impulse, correction and correction. There's no other way market can move. Correction is a choppy market. Market is very choppy doing correction, and sometimes market go impulse, comes back in impulse wave. Sometimes it goes up in a correction state and comes back in a correction state. Market can do this as well. It corrects itself and the given impulse, then correction, impulse, correction, impulse, correction. That's how market moves. That's it. What we have to do, what we have to study, that which pattern to adopt to be a profitable trader. Market moves in impulse wave and then corrects itself. When market corrects itself, this is the best pattern to trade. This is what we trade. It's our number one priority. We will try our level best to catch these patterns. Another pattern which we can grab is market moves in correction up and correction down. We can use this one as well. We can grab trades out of it as well. What we don't have to adopt is, we don't have to trade one pattern one way, impulse and impulse. No, we will not trade this because it's dangerous. It's an uncertain scenario. The market is giving market is highly volatile and uncertain, especially nowadays when the coronavirus is going on. Especially in those days when any election come in, any referendum come in the world of that specific currency pair, market can be impulsive, and in the answer it give an impulse bearish as well. What we have to do, we have to trade an impulse and correction. That's what we just talk about now: impulse and correction, or correction upwards and correction downwards. These two patterns we'll have a concentration on. Okay. Now, what happens is market moves towards the bullish side upwards in an impulse. This is going to be a very sharp movement, impulse wave. It goes up very fast It stops here, it starts coming back down. When it starts coming back down, it will create, it will give us correction. It will correct itself. A choppy move, noisy move, right? This scenario will be very noisy, and it corrects, and after this correction, what it will do, it will create a pattern which is called a price action pattern. It's going to create a pattern. There's going to be a falling wedge, a symmetrical triangle, falling channel, falling wedge, ascending or descending, any triangle. It can form these patterns, price action patterns. So now we are adopting one thing from Elliott wave theory, is an impulse wave concept. The second one, which is correction mode, and we will find the pattern of price action. And after this price action pattern will break, here is where we trade on the breakout. This is called a breakout concept. When it breaks, it will go exactly till the end from where the correction started. So your target, your TP, will be at the end of this this falling wedge or falling channel or whatever price action pattern is. Okay, that's fine. Now what we do, let's see the 4 points which will confirm the correction have started. So for example, market moved up in an impulse wave. It stopped here. Now it's gonna come back. It gives us another wave down. You don't trade. You're not gonna trade this at the moment. I'm gonna tell you when to start, when you're gonna execute your trade. Right. When it comes down, we don't know where is our trend line. We don't know. We cannot. For example, there is no history. There is no history of this currency pair I'm talking about. Market came back. It will give us a push. Then it pulls back again. Then it runs again down there. So when it runs down there again, now we create a trend line. Okay. So our resistance trend line has been created now. This is our trend line. Now it comes back down again, gives us a push, then pulls again. As soon as it will pull again, it will allow us to create another trend line like this, and from here we will see 1, 2, 3, 4 points have been cleared, and market gave us a view that it has created a price action pattern. The pattern can be a falling wedge, a falling channel, a symmetrical triangle, ascending or a descending triangle, whatever it is. But we need to see this pattern after this impulse wave. Okay, now market moves up and down in this area, right? We keep watching it. We don't have to trade at the moment. And all of a sudden market breaks this trend line. Very good. Now we are talking. We are in a business. And as soon as it breaks this trend line, probably will have some support and resistances, previous support and resistance. Now what we need to wait that market breaks this lower high when we're talking. And another thing, let me explain it. There was a bullish impulse wave. When it corrects down there, right, it creates a pattern. But when it creates the pattern, it is giving us a signal that market is probably going to continue, and this is a continuation pattern. This is bearish market. Let's talk about the bullish. This is a bullish market. Let's talk about the bearish market. Market gave us an impulse wave. It started correcting, right, like this. It created a rising wedge. Very good. We need to see if it breaks here, it's going to break a trend line, and we need to see the previous higher low. If it breaks the higher low, this is the higher low, it retests. This is where we enter the market, and we will execute our trade till the end of the correction. This is the area from where the correction started, right? So we we'll set our take profit here in this area. So we take a trade here. In this scenario, we will give TP here. Why? Because the retracement started from here. I think I'm clear till now. Right. Okay. Next thing, again, same pattern. Market was in impulse state. It stopped here. It gave us 4 points, which gave us a view that the pattern has been created. Now we know one thing. This is a falling wedge. It breaks from the top. Falling wedge breaks from the top. So when market goes here, it comes back down. You can take a trade here till the trend line, right? Then you take your profit and you book your profit and leave the market. Then you allow the market to come down until it breaks from outside. Up down, up down. You can keep taking trades whenever it comes down. You can keep. It's called swing trading. It's proper swings you are trading now. But our aim is to take a big trade on the breakout. Here market breaks. It goes up, retests. Now our take profit is here. This is where our take profit is, and this is an H4 chart, right? Okay. What we have to do now, market is going towards the TP, but in the smaller time frame, this was H4. If we go at the same time when market is moving towards the upside, M30, or we talk about M15, right? Market is giving impulse waves and correction in the smaller time frame. You keep taking trades in a smaller time frame until it reaches this TP of yours. So one of your trade was executed when it was a breakout. Loads of trades you can take while it's going upwards. Loads of trades. Impulse correction, keep taking trades, impulse correction, till the take profit area. In this way you can trade this chart as many times as you want. Let's see an example. Let's see a very, very nice example. What the hell is this? Why is it not moving? Let's see this one. Why is it not moving? Okay. This was our trend line. There you go. Market gave us an impulse wave. It corrected here. How it corrected here? If we look at M15, look how nicely it was creating a falling wedge. Right. How it was creating a falling wedge like this. It created these two you have to draw a trend line. It was a very nice falling wedge, and you could wait here. Breakout, you can go up. Right. But we'll focus on something else. Here we have to focus. Correct impulse, correction, impulse again, correction, impulse again, look, correction, then it's gone up. It didn't give us any impulse. So what is giving a scenario that, oh, okay, probably is going to come down, and yeah, it created a head and shoulder here, which is showing that it probably is going to reverse back down there. That's it. There was a live example I wanted to give you. Let's come back to the topic again. Okay, now, until now I've explained what is an impulse wave and what is a correction, how the patterns are being created, and how we take a trade till here. And while we take a trade after the breakout, what we do, we keep trading in the smaller time frames in M5, M1, M30, wherever you find these patterns, you keep taking trade, let it go until. So you can take 2, 3, 4, whatever comes in, take small profits, go out of the market, book it, then take another trade after the breakout, keep taking trades. Now, let's talk about the breakout. How are we gonna take a trade on the breakout? So market gave us an impulse wave. It corrected nicely. So when it will correct, it's gonna give us a pattern, right? So we're waiting for a breakout. The market broke out previous resistance area, which is lower high. It broke it up. It broke this lower high. It retested it. There you go. This is the point where you enter the market and let the market go up. Now we have two confirmations: breakout of a trend line and breakout of a previous lower high. Two confirmation. We need another confirmation. That confirmation is gonna be an exponential moving average. It's going to be an exponential moving average. We'll pull it on our charts to confirm the breakouts. Impulse wave correction. Now it's trying to break out. It broke the previous lower high. Yeah. And if the moving average is moving like this, or it's inside as well, if the market breaks, we need to see 3 breakouts. Now we need to see 3 breakouts. Market gave us an impulse wave, it gave us a correction, and there's a moving average going down there as well, like this. Now we have to wait for 3 breakouts. Number 1, the resistance trend line. Number 2, previous lower high, or in the rising market, this is a bearish market inside. The dominant trend is the bullish market. The inside trend is more immediate trend is the bearish market. Lower high or previous higher low, right? Whatever is gonna be, whatever market is. And the third thing is 50 exponential moving average. As soon as market breaks these 3 things, market is good to go up. So the scenario was then moving average coming down. There was a resistance. Market broke the trend line. Market broke the resistance. Market broke the moving average. And market retested. For example, like these 3 things, the market broke out, retested it. You enter the market. Market will go till you take profit. Until that, if it's giving you any falling wedges after the impulse wave, keep taking them. Or if there is no impulse wave still on the falling wedges, you keep taking the trade till the end. The most easiest way, the most profitable way you can take a trade. Let's see an example now. Where is Kiwi Yen? Let's talk about the latest example. Okay, here we go. We had a trend line coming down. Market was in a bearish trend. Very good. All of a sudden, something happened in H4 chart, right? Market gave us a very nice impulse wave and started correcting. Right. It allowed us to create our trend lines, and there we go. Impulse wave and correction. Yeah. Now we wait for the breakout. Market broke out. We took a trade. We let it go till the end from it started. This is a simple way. Now we have to multi-confirm this by drawing it properly. So this is our trend. Imagine this area not yet been created, right? This is how our chart looks like. An impulse wave, a correction. Very good. What we do, we pull out an exponential moving average 50. Right. We will create our resistance or support, whatever is in there. There you go. Now, what happened here? Market went up. It broke the moving average earlier. Very good. It went up. It broke the trend line. Very good. And it broke this resistance area. Luckily, the point of confluence was very close. It went up. It gave us a retest. It retested trend line. It retested moving average. It retested its previous resistance, which is support now. Boom. It will be a very fast move. And how many pips it gave us? So after this retest, we try to take this trade. It's 104, 107 pips trade. It's H4. This is H4 chart. Right. So now what happens? We come into M15. Right. We came back to M15, and here, that was the breakout. That was the breakout. It gave us a breakout here. After this breakout, when it came back and it retested, this was a retest, yeah? And we executed our trade here. It was going slowly up. As many times we find any falling wedge, it created any kind of a falling wedge, we take trade. In M1 or M5, you'll probably find more falling wedges. More and more falling wedges. Where's that point? Okay. This was down, retested, one. There you go. Another one. As many times it came up, it broke up, you have to take it up. Right? Look at this. Look at this. It won't stop. It's M5. It's gonna be very fast. Yeah, all you have to have your eyesight very strong. Like fast moves, down, fast moves. If you don't find anything else, okay, leave it. Let it go up because one of your trade has already been executed. It's going up. It'll go till the end. Okay, now what is going on now? After it reaches this take profit, you have to just wait like with patience. There's where you have to understand that you need to have some patience and let the market do another thing. So it gave us an impulse wave, it gave us a correction, very good, and it went up and hit the target. Now what's going on? Now another rising wedge is forming here. Wow, that's good. And this rising wedge says that this was an impulse wave altogether. Wow, impulse and correction to the opposite side. So now you know one thing, market gives an impulse wave and corrects down, so it gives any pattern, right? Price action pattern, and this pattern will tell us what kind of pattern it is. It's a falling wedge, it will break from up. It's a rising wedge. For example, after an impulse wave, it gives us a rising wedge. It breaks from down. It's a reversal. Okay, very good. So now this is a rising wedge after this impulse wave. Right. After this impulse wave, this is a rising wedge. Very good. What do we expect? We expect it to break from here. But in the meanwhile, we'll grab what's going on inside. Like this was an inside scenario. How? What is going on? Let me pull the moving average as well to tell you how to trade inside. Okay. So if we come in the H1, shorter time frame, there you go. It was an impulse wave, correction, breakout, up, correction, breakout, and it formed a rising wedge here. Fine. And this is a rising wedge as well. Fine. It broke the moving average, it broke the trend line, it broke the previous support, which is a low, it was creating higher highs, right? Higher lows. It broke the higher low, it broke the moving average, you take a sell, it retested, you take another sell maybe, or you just wait for this retest. Came down, its target will be this. And good thing, it's a rising wedge in H4 as well. So probably, because the moving average is above the price, it will come back here. Right? We'll see. Its target will be this trend line. So you're multi-confirming impulse wave correction, breakout, and this was a reversal, opposite Opposite correction means a reversal. The reversal says it's going to go down to the bottom where the support trend line is. This is the most easiest and most difficult strategy methodology of the world. And if you have a command on this strategy or this what do you call it methodology, breakouts, concept of Elliott impulse and correction. You don't need to draw loads of legs, wave 1, wave 2, A, B, C, X, Y. You don't have to do it. You have to just follow impulse wave, correction, wait for correction, correction happens, price action involves, price action pattern involves, see the breakout, breakout happens, previous resistance happens or support breaks, moving average breaks, boom into the trade, take the profit, get out of the market. As easy as an ABC. Right. Now what you can do as well, you have another way. In case market is going up by correction, you draw a trend line, draw support resistance, moving average moves here. If the moving average is just next to your trend line, so you wait. You wait for this support to break, you wait for the moving average to break, let it go till the next support. This is your trade. This is another way. Let's see where we can do like this. Let's find a simple scenario. Let's find a simple scenario. Let me see one of my trades going on. Let me see the price first. Good. Look at this Euro Kiwi. I'm gonna give you an example as well now. Look at this Euro Kiwi. What a nice hell of an impulse wave and correction. Yeah, I'm waiting for this breakout. It's gonna go by. Moving average already been broken. I'm waiting for the trend line and previous resistance need to be broken and executed trade. And this small, it says M15 only, right? This is M15. So if it starts, it's gonna give me 41 pips. Boom, very fast. It's gonna be a very, very fast move, right? So a breakout happens after an impulse wave and correction happens. After this impulse wave, when any kind of price action pattern occurs and breakout happens, the move will be very, very fast. Remember that. If the move is not fast, doesn't matter. Doesn't matter. If it goes like this, slowly, 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 it'll go there. Definitely, it'll go there. Trust me. What if it goes like this and it gives you a rising wedge? Then you have another chance to take a sale. After this take profit, you can take another sale. How? You wait for this trend line to break. The moving average will be here somewhere. Okay. Let me tell you one thing. Moving average above the price, above the candle means market is in a bearish trend. Moving average below the currency price means market is in a bullish trend. Simple. Moving average is just a confirmation indicator. There's like you can use any indicator if you're good in probabilics, or if you're good in any kind of indicator. It gives a signal, buy or sell signal. You use that indicator just on the breakouts and you will see. You want to just do moving average, you want to apply another moving average, you want to apply probabilics or MACD or whatever at the time of a breakout. You can use if you have a command on that indicator. I like exponential moving average 50. That's why I use it. That's why I use it. So this is the, if you've got any question, you may ask in my Telegram group from me directly. I can explain the answers again. Look, we're just here. Look, it's a live market. How fast was this breakout, right? You'll see within moments, because it's as smaller time frame you can use any time frame, As smaller will be the time frame, as fast will it be. As fast as gonna hit your take profit. It's gonna be very fast towards your take profit. All right, I think I'm very clear. If I'm forgetting anything else, I will let you know. So what we learned, we already have studied trend, how we have to see the trend, higher highs and higher lows. Higher highs and lower highs, higher highs, higher lows, lower highs, lower lows, right? We know how to draw support and resistance. I've discussed it in my previous videos. So watching all my previous 7 videos, and then you will come on this video, then it will be very helpful. Finding the wave, how you find an impulse wave and correction when the previous impulse wave happens, anywhere impulse wave happens, in a minute one, in minute five, you can grab the market from there. But just remember, you have to watch H4 market and H1 market first, and then you have to come to the smaller time frame. You can scalp with this strategy as well. I will make a strategy on scalping again. I will make a video after 2-3 days. I'll make a video. This video is gonna help you out to learn scalping as well. Then you have to be very firm, and you have to have a command on your price action. If you are very good in price action patterns, you will be very fast to learn impulse and correction scenarios. Breakout, I've explained breakout very good. As soon as the market breaks trend line, previous resistance or previous support, whatever the market situation is, and then moving average, confirm it from the moving average and take a trade. I hope you understand this lecture well. If you have any questions, you probably can ask me. Thank you so much.